Hello and welcome to Asking for a Trend. And for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we're going to be diving right into. It was a mixed day on Wall Street Friday as investors digested economic data and tempered their rate cut hopes. The major averages remained on solid footing for the week, but at the end of the session on Friday, the S&P 500, the NASDAQ ended the day down. The Dow finished higher. And higher prices may be brewing when it comes to your morning cup of coffee. We're taking a deep dive into the impact tariffs are having on Java. And Infiniti is rolling out new cars in style. We're talking to a company executive live from Pebble Beach during one of the biggest events of the year for auto enthusiasts. Well, coffee drinkers are swallowing higher prices, and it's about to get worse. Coffee prices spiked 14.5% in July from a year ago. That's according to BLS data. And while the average retail price for a pound of ground coffee hitting $8.41, and that's before President Trump's 50% tariffs on imports from Brazil hit. Brazil is the world's top coffee producer. The U.S. gets more than a third of its unroasted coffee imports from Brazil. And here with more is Ricky Volpe, former USDA economist and Cal Poly professor of agribusiness. Ricky, it is good to see you. So let's start there with Trump imposing this tariff on Brazilian goods. Ricky, for the U.S. coffee industry, how important is Brazil? Can you just help us quantify that?
Oh, it's the largest exporter of coffee beans to the U.S. for sure. And, the fact that these tariffs are going into place right now and are affecting a place like Brazil, it's just right now we're having a very important reminder that these tariffs, which are almost surely going to have noticeable impacts on food prices in the coming weeks and months, they don't happen in a vacuum. Everyone's aware that coffee prices are rising, and like you said, that Brazilian coffee prices and global coffee prices have been rising well before these tariffs were implemented or even announced. And now the potential effect of the tariffs will be kind of on top of what's already been going on with a very challenging year in the global coffee market, including in Brazil.
Could the U.S. coffee industry, Ricky, is there any way for them to replace Brazil? Can they look for alternative sources of supply?
There are certainly options. There are options for seeking to import more coffee from places like Vietnam, which has had its own severe weather problems, Indonesia, Ethiopia, perhaps some other countries in Latin America. It is still the case that most of the coffee import in the U.S. is from the countries throughout Latin America and down to Brazil. But the problem with that, and it's related to really most food products, in fact, there are very few exceptions on this, the supply is inelastic. And that's just kind of a fancy way of saying that it's not as if there are stores of coffee sitting around in places like Vietnam or Indonesia or Ethiopia that the U.S. can just purchase during a time of need. Most coffee in a given growing season is accounted for through, contracts and other arrangements. So the capacity for the U.S. or really any country to pivot in the short term and shore up or augment supplies is pretty limited. And that's true for coffee, which is a high value product. Most of that stuff is already spoken for.
Can I ask you, Rick, I'm just curious, what is domestic production actually like?
Very small. The United States is technically a player, but between Hawaii, which is mostly the Kona region, the Big Island, and Puerto Rico, we're talking about best case scenario 3% of the coffee produced in the U.S. Consumed in the U.S. And it might even be smaller than that because there is a market of exporting coffee from places like Kona around the world. So honestly, it's probably closer to around 1% of the coffee that we drink as Americans is grown domestically. And there's, given land constraints in both those places, these are islands we're talking about, there's effectively no capacity to ramp that up and substitute what we've been importing.
So what do coffee roasters actually do here then, Ricky? How do you navigate this tariff? I mean, do you try and change the recipe? Do you eat it? Do you try to pass it along to Ricky and Josh? What levers can they pull?
In the short run, it's absolutely going to be a combination of eating it and passing these along. Probably the number one question that I've been receiving since these tariffs were first announced is, Who's going to eat them? Who is going to feel them? There's a wealth of research on tariffs. And to be fair, these are mostly affecting row crops, the building blocks of the food supply chain. So corn, wheat, soybeans. But there's a lot of work that's been done on the first Trump administration on what were the impacts of those tariffs. And just like you just said, it's been shown that the brunt of these tariffs was borne by a combination of firms, typically manufacturers, retailers, and then mostly consumers. And the reason for that is simple. Most food companies operate on very thin margins. There was a narrative that became pervasive during COVID and the aftermath that a lot of companies were engaging in unfair pricing or price gouging. Of course, I'm open to the idea that there have been some bad actors, but in general, it's pretty easy to look at the CPI and PPI data from BLS, the numbers that you guys cited to kick this segment off, and see that margins are not only thin, but they've been shrinking during this inflationary period of the last 3-4 years. So the capacity for importers and roasters, and then especially retailers, to eat this and see their margins shrink even more, very, very limited. So we can expect to see coffee price inflation, which is already one of the fastest moving categories in terms of the CPI, food prices that we look at. It's one of the few categories that's really been experiencing sustained inflation throughout 2025. Almost likely we haven't seen the peak yet. That's going to continue to climb in the next, my best guess is 3 to 5 months. You're
going where I wanted to lead you there, Ricky, because I was going to ask you, coffee futures, you're at your highest level in 2 months. They're having their best month since January. And I was going to ask you where you expect to see prices in the months ahead. Can we, what levels would you be looking for?
It is very hard to imagine a scenario where retail coffee price inflation cools off in the next couple of months. So yeah, I'm going to stick with that. We can expect to see those prices continue to increase substantially for my best guess is the next 3 to 5 months. And the advice I would offer to you and your listeners is if you want to get a feel for where coffee prices or really any retail prices are going, look at the corresponding producer price index. When you hear about food price inflation, usually folks are talking about the CPI, the consumer price index. And that makes sense because that's calculated based on the retail prices that, the Rickies of the world pay when we go to the supermarket. But the PPI, those are business to business prices and they're much forward looking. And the trajectory of increase for those prices for farm and wholesale prices for coffee beans has been even more dramatic than the retail prices, which means we still haven't seen the biggest gains. There's more to come. And we haven't even been talking about the tariffs on steel and aluminum. And, the coffee supply chain is one that would be hit particularly hard by that in terms of the packaging and the sort of capital inputs that are required to grind coffee and store it and keep it fresh and temperature control and all of that. So once those steel and aluminum tariffs on places like China start to filter in the food supply chain, it's only going to stack on top of these commodity price impacts that we're already seeing.
Ricky, great to have you on the show today. Thanks for walking us through that. I appreciate it.
Thanks a lot.
Stocks ending the week mix. Let's get to data and markets editor Jared Blickery for the Train Day takeaways. Jared.
Thank you, Josh. We're going to start with the week that was. Let's check out some of the weekly scores here. Interestingly, it was a mixed week. The Dow actually finally crossed into that territory that allowed me to say record intraday high. We have not had one of those since last year. So I'm going to show you the 5-day chart of the Dow. And I think we got that right in here. And you can see we ended pretty close to the highs of the week, 1.74%. Now the NASDAQ, which ended the day down, you can see off of the highs, but still keeping some positive territory for the week, up about 0.8%. Here's the S&P 500, very similar to the NASDAQ, 1%. And the small caps, which we were talking about around the close, those actually stole the show, up 3%. But you can see we actually gave back some territory. They were up close to 5% earlier, just a few days ago. What I've been watching is what's happening in the bond market. I'm going to show you the 13-week T-bill yield first, and we can see that it's been dropping here by a few basis points. I don't show this a lot. It doesn't move that much, but it closely tracks what the Fed does in the market, its overnight rate. And so that's why I'm looking at this. We had a big drop, and this came after that CPI report that we got on Tuesday. And so while short-term rates are heading down, longer-term rates are heading up. 10-year up a few basis points, up to 4.33%. But here's what I'm watching here. The 30-year up to almost 5%. And we remember 5.0 to 5.1, that's when equities start to tumble over, and that's because the bond market, the bond vigilantes are somewhat in control there. US dollar index also kind of down on the week, not too concerning. I will go next to the sector action. This is where it gets really interesting. Healthcare, which has just been slammed. Not only this year, it has not had much love over the last few years, but it is up 4.6%. That is XLV in the leadership position. Then we have communication services and consumer discretionary. Those are two of the mega cap sectors. Then we got materials and financials. So overall, it was a pretty bullish week for stocks. And I will also take a look. Here we go. Here's my leaders. We can see MJ, that's cannabis. We're going to go to the monthly in a little bit, but just want to let you know that cannabis has been on fire recently because of President Trump. Not going to make it legal, but kind of de-escalate it from the DEA and just make it a little bit less illegal. So that's a rescheduling that we're talking about. And then solar, my favorite ETF, TAN. That was up 8.4%. And that's also based on, I think, an expectation of an executive order that's going to be lowering some of the subsidies, but not by as much as had been feared.
So we did weekly?
Yes.
What about monthly?
Let's just change this right here to a month to date. And this is going to show you there's cannabis in the #1 position, but then we have home builders, IPOs. I was talking about some of the meme stocks in the fringier parts of the market. Those have been lighting up recently. Then we got solar, then we got retail. Biotech is part of the pharmaceutical trade. Healthcare has been on love, biotech has been on love, but not this month so far. And then we got Chinese stocks, and there's another biotech, transports. So the bottom line is what has been working, and that would be software down here, not working this month. And some of the other parts of the market have stepped up. And that's what we see in part of a market rotation. That is the lifeblood of a bull market. So you put it all together. I'm not too concerned about this because we got a lot of green on the string, and we're just seeing money move into some of those pockets of the market that have been unloved so far this year.
Let's talk crypto.
Let's do that. And we're going to I'm going to fast forward here because Bitcoin rug pull. What does that mean? We got a new record high only a few days ago, and guess what? We are back down. We had a kind of a nasty fall off of that. It's not anything that's disrupting the long-term trajectory of Bitcoin here, so I don't want to scare anybody, but nevertheless, we climbed to a new record and then we had a big downdraft. That is something that I see all the time in crypto, those false breaks to the upside, and sometimes you get them to the downside too. So that's kind of the rug pull situation. But we can also take a look at Ethereum. That's up 22% month to date. That is just on fire, 4,400. I wouldn't be surprised to see 5,000 soon, just a guess. But I also had the chance to talk to Keith Bliss about some of the crypto moves that we've seen so far this year on Stocks in Translation. Let's take a listen.
So Web3, as you're pointing out, is the value layer on the internet, and there will be a Web4 and a Web5 as we continue to advance the technology. But again, when it comes to payments, using stable coins or using some of the other altcoins to actually move money, transfer value from one part of the globe to the other part of the globe, we're just scratching the surface, and people are now realizing what to do with that. The next iteration then will be for all of us as consumers to walk into our convenience store or grocery store and actually pay with stable coins or other digital assets, and that's coming rapidly.
Real quick, really telling that I got to know him on the floor of the New York Stock Exchange. Now he's just doing crypto.
That's right.
Yep.
Keith Bliss, I got to know him on the same floor. Nicely,
Yes.
Great guy. End here. What is on the Jared Blickery radar for next
I am
week?
always interested about Jackson Hole. That's going to be, Chair Powell's going to be the leader, kind of the keynote speech on Friday. So I'll be tuning into that and see what it does to interest rates.
Well, I'll be watching. Thank you.
bet.
Buddy. Appreciate it. Yahoo Finance is on the ground at Monterey Car Week in Carmel, California. Let's send it out to our senior autos reporter, Praz Sumeranian. Praz.
Josh, yes, Monterey Car Week 2025. We're at the Quail event at the Infinity stand. Joining me now is Tiago Castro, the head of the Americas here at Infinity, with the new vehicle, the QX65. Now, it's a concept, but we're going to see a similar car. Talk to me why this product is so important in that ultra-competitive mid-size SUV space.
First of all, thank you for joining us here, Pras. It's an honor to have you here. QX65 monograph, beautiful vehicle, as you see. We're trying to attack this, the biggest segment in the industry, really for the luxury industry, with a two-row, fastback, really sexy SUV, which will bring more customers to Infinity and allow us to continue our growth path. So that's the event here, showing the vehicle in front of a lot of people. This is a concept, as you just said, but it gives you a good hint of what's coming next spring, 2026.
So yeah, but next spring, right? So, but Infinity though is in the middle, I believe, of a product renaissance. Talk to me about that and how the QX kind of sits in that.
Absolutely. So we're in the middle of a product renaissance that really started with the QX80 last year. This vehicle has been building momentum. We actually had this year the best 7 month ever in sales for the QX80. So really good moment. We're now transitioning to launching the new QX60. That's our 3-row SUV. It's smaller than the QX80. Also doing really well. Both of them are up year over year. And next year, we launch the QX65. And the goal now, as we accelerate the future, is to launch 1 vehicle per year for the foreseeable future.
So you mentioned, strong sales of the 80, which is that full-size SUV back there. It's a very popular segment in America. But Infinity overall, along with Nissan, you had a rough patch and is sort of emerging from that. What's sort of the game plan there to get the two brands sort of on the right path here in the United States?
So first of all, nobody can say that we didn't have a tough year last year. Very clear. But here's the important part. We have a very clear understanding of what needs to happen. There's full alignment in the global team and the regional leadership team that in order for Nissan to be stronger, Infinity needs to be strong. So we're going to invest in the right product in the right moment. Today, in addition to the QX65, you can see 2 concept cars for the QX80. So this is our flagship model. What we're trying to do is to check with the market, what do people really like? And we're looking at 2 sides of the spectrum. One is the QX80 track spec. Track spec is, think about getting our current engine and increasing horsepower and torque by more than 50%. Torque is up to 750. So think about this. And then horsepower is 650 plus. We're plus is just plus,
So, I mean, pretty competitive feature set
Absolutely.
there with Infinity and kind of versus the competition. But Infinity being a Japanese automaker and you have presence around the world, tariffs are sort of a thing that's a story these days in the automotive sector. So you have a deal with Japan and the US, I believe 15%, that helps. But not with Mexico and Canada. Where do you sit there? How do you battle tariffs from an Infinity point of view?
Well, the first step for us was to understand the product portfolio and how can we optimize delivery. So, for example, QX50, we had to pause the production into the US. But in Canada, there's a lot of opportunities. So we shipped more vehicles there. We also increased production of QX60 that is built here in the US. The good news, for example, is the QX65 behind us will be built here in the US as well. So very important for us to increase that footprint. But then we continue to accelerate, for example, on the flagship model that I just mentioned. We want to continue to bring them and not stop. The customers are reacting very well, and we need to deliver the vehicle.
So even if they're built abroad in other places where you're facing tariffs, you're able to still sell the product and maybe absorb some of that cost.
Absolutely. And then identify, where's the opportunity, for example, to reduce costs elsewhere. There's other things you can do. So it is a evolving challenge for sure. But we have to deal with this.
So real quickly on electrification, where does Infinity stand on that? Are you guys doing more hybrids? Is it going to be full EVs coming? What's the deal with that?
So in fact, next week, we're going to invite all the retailers from all over the Americas into Las Vegas, and we're going to present the plan for the next several years. In that plan, you'll see internal combustion engine, hybrid engines, and electric vehicles as well. So all of that, I'm not ready to share much more with you today, but I can tell you we are full committed to a product portfolio that will attract the American customers and they can join us.
So a balanced kind of portfolio.
There will be a balanced portfolio simply because, we feel that the market is well balanced. There's a lot of opportunity for internal combustion.
So real quick, we're in Monterey Car Week. We're at the Quail. This is it's a big event for big time buyers. Why is it important for Infinity to be here? And also give me your quick take on the luxury consumer.
Okay. Well, first of all, important for us to demonstrate what we can do to this luxury consumer. A lot of customers here, they love what they're seeing. I didn't mention the terrain spec, amazing as well. This is one that is getting a lot of momentum here. But as far as the consumers are concerned, we see the market still moving in the right direction. Leading indicators, everything from website traffic to visits to dealers are increasing. So positive year ahead of us.
So, a little uncertainty, but with the luxury consumer, maybe they're not hurting so badly. Thiago Castro, thank you so much for joining me here, and lovely Carmel. Back over to you, Josh.
All right, thank you, Praz. It's time now for your earnings what to watch. Coming up, some big box retailers, Home Depot, Target, and Walmart. First up, Home Depot, set to release earnings before the markets open on Tuesday. Consensus estimates have Home Depot's same-store sales climbing almost 2% for the second quarter, which would be just the second increase in 10 quarters for the home improvement retailer. Revenue expected to rise, but weakness in discretionary categories due to interest rates will likely stall Home Depot's revenue for Q2. Next, Target reporting second quarter earnings. It's coming Wednesday before the markets open. Analysts saying that store visits might slow to the low single digits in Q2 in spite of Target's strategic moves like price investments and product expansion. Investors will be listening for any commentary on the call about Target agreeing to not renew its partnership with Ulta when it ends next year. And finally, Walmart releasing its second quarter earnings before markets open on Thursday. Analysts expecting low revenue growth for the retail chain, primarily due to a high inflation creating a trend of value-seeking consumers. Walmart's price rollbacks and e-commerce offerings will likely boost store visits and same-store sales growth. Analysts say tariffs are another factor that could weigh on Walmart's earnings. Well, that is a wrap on today's Asking for a Trend. Be sure to come back Monday at 4:30 p.m. Eastern for all of the latest market-moving stories affecting your wallet. Have a great night.